Hello friends, in the series on the income tax cases, today we will discuss the case of Principal Commissioner of Income Tax versus PEC Limited and RITES Limited. In this case, there were two respondents, PEC Limited and RITES Limited. This case has been reported in 451 ITR at page number 436 and the matter has been decided by Delhi High Court and the date of the judgment is 29th November 2022. This case is regarding CSR expenditure. As all we know that there are some conditions, there are some limits. If these limits are met out, then the company has to compulsorily expend some amount on the corporate social responsibility. The companies were incurring this expenditure and were claiming that expenditure under section 37 subsection 1 as expenditure. The government felt that this expenditure should not be allowed, and just to avoid the litigation, the legislature made an amendment by inserting explanation 2 to section 37 subsection 1 that any expenditure done on CSR will not be treated as wholly and exclusively for the business and it will not be allowed under section 37 subsection 1. And the legislature itself was clear that this amendment has been made effective from the assessment year 15-16. Even the memorandum to the Finance Act 2014 was very clear that this amendment is with effect from assessment year 15-16. After that, just to avoid any litigation, the CBDT also came out with the circular dated 21st January 2015, which made it emphatically clear that this prohibition is only with effect from the assessment year 15-16. In spite of that, when the assessment was going on and the assessee was on the point that this amendment is with effect from the assessment year 15-16 and my assessment year is assessment year 13-14 and 14-15. So for these two assessment years, the amount incurred on CSR should be allowed to me under section 37 subsection 1. The AO did not give the relief. The assessee got the relief from the ITAT also. But as we know that it is a ritual that the department goes for the higher forums. Although there is clear cut guidelines from the CBDT that only those issues should be litigated which have some value, on which the department is sure that there are chances of winning. But all those principles of litigation are just kept under the carpet. So in this case also, this matter came to the Delhi High Court and Delhi High Court said that the act is clear, the memorandum to the budget is clear, and after that the CBDT circular is clear that this amendment has been brought with effect from the assessment year 15-16. And if the three things, that is Act, Memorandum and CBDT circular is saying that CSR expenditure is not allowable from assessment year 15-16, it automatically means that CSR expenditure is allowable for the earlier assessment years. So the period which was pertaining to the assessee was related to the assessment year 13-14 and 14-15, and there is no bar that this expenditure should not be allowed to the assessee. So Delhi High Court categorically allowed this expenditure to the assessee as revenue expenditure under section 37 subsection 1. Delhi High Court was not impressed with the point of the AO that this expenditure is an appropriation of income and not a charge to the profit. We have seen a lot of expenses into the Income Tax Act which are wholly and exclusively for the business, but there is a prohibition in the Income Tax Act to get the deduction or the allowance of that expenditure. And if the Act says so, then that expense cannot be allowed. But by saying that this is not a charge, this is an appropriation, that is not correct. CSR expenditure is not allowable to the assessee from the assessment year 15-16 only because the Act says so. The explanation 2 to section 37 subsection 1 says so. So in this case, the High Court allowed the appeal of the assessee. At the end of this deliberation, once again I am repeating the name of the case. The name of the case is Principal Commissioner of Income Tax versus PEC Limited. The second respondent is RITES Limited, and the matter has been reported in 451 ITR, page number 436, and the case has been decided on 29th November 2022. Thank you, friends.